Good morning, this is the Phoenix Blue update on Wednesday the 8th of February, presented this morning by Tom Colley. Yesterday we had the welcome return of the dollar bulls, somewhat in the absence of a lot of news. The reason for that could be a number of things. The Trump administration's attempts to repeal the Dodd-Frank regulations could be seen as positive. In addition, the market's potentially starting to believe that Donald Trump will actually follow through on the policies that he set out in his campaign, because to date he has, in some shape or form, gone ahead and done exactly that. Okay, before we do anything else, let's have a look at the news we did have yesterday. Well, Mark yesterday morning mentioned the RBA rate statement. The only news we had, or red flag news we had, was the Canadian trade balance that came in below forecast at 0.9 billion, and the dairy price index, the auction price index from the Kiwi that came in ahead of last fortnight's 0.6% at 1.3%. Going ahead to today, through the day again, very little news again. We have the crude oil inventories. We've seen crude under pressure so far this week, as it's down at the bottom of its recent range, about the 51.50 level. The top of the range being about 54.50. So it'll be interesting to see what that does, but I personally expect that crude will stay in a range around that sort of level, potentially for a considerable period, unless something comes into the markets or into the news to upset that. This evening, the important thing is we have the RBNZ rate statement. We don't anticipate a change in rate. The forecast is for no change in rate. And I think the perceived wisdom of the markets is no further rate changes for the remainder of the year. So we have the rate statement and the announcement of the cash rate at 8 p.m. UK time this evening, and 9 p.m. followed by a press conference with the chairman of the Reserve Bank of New Zealand, who again speaks, Governor Wheeler again speaks around midnight again tonight. So probably the press conference may be significant enough. There may be further comment on that basis, but obviously if you're involved in the Kiwi market at this moment in time, you need to be aware of that. But that is the sum of the news for today. So as I said, it's very quiet news-wise this week so far. What we've seen in the market is the return of the dollar bulls, and here we can see exactly that. We've had a falling wedge here. Dollar yesterday broke, on the dollar index, broke out of that wedge, came back an intraday and retested the confluence of that wedge, and let's call it $100 level through there, which is the green level through there. Now, we took advantage of that in more than one market. We saw that replicated in the reverse on the euro. We can see the down movement here. Intraday retested the rising wedge in this instance, and we took the trade to the short side. This is the H4, which is the time frame we took it on. I have to admit I'd pinned the absolute level at 1.0705. I jumped in a little on the 4 hour because I thought the market was moving away. It then went straight back up to my exact level. So a lesson to myself is be a little bit more patient before jumping in that. However, that doesn't make it a bad trade. It just means that I'm 10 or 15 pips worse on entry than I would have been. So I would quite potentially have a stop at break even at this point by now, and some profits off the table if I'd been a little bit more patient. But the trade itself is, as I've said, it's basically that intraday retest of this rising wedge at a key level in confluence with the dollar index. Can also see exactly the same here on the Swissy. We've got, in this case I've only shown a trend line, there's less of a distinct falling wedge, but we've got a break above that trend line and then a pullback to retest. The entry on this one was more cautious and was taken on the 10 p.m. 4 hour bar. last night, which was a nice low test off that level. So again, we're in this market looking to the upside to play out that dollar strength. So that's 2 trades based on that. Now, what's been a little bit different this week is the yen hasn't been playing diametrically opposite the dollar. So whereas we had seen the level on the dollar index, the yen isn't part of the dollar index itself, but more importantly, it had been strengthening at a time earlier in the week when the dollar was also showing some strength. In fact, yesterday we had an intraday level from this 112.55 level through here. We took that to the short side. We had our stops at break even, and we closed that trade as we saw the dollar strength return on that retest of the wedge we've already seen, and at that base time we closed out that trade for approximately 0.8% overall profit. So that was a nice little trade in intervening before we came in with that dollar strength. We'll now look to that for that to play out, but before we look at getting into the yen on that basis, we'll be looking for a break above this level through here at 1112.60 and a retest of that to take that to the long side when we've seen that the yen is weakening into that dollar strength. As I said earlier in the week, it hasn't been operating exactly how we would expect it to. Over on the pound, well, we had a very volatile day yesterday. We came right down to this level here in confluence with my channel through there. We bottomed there, and then on some hawkish comments from one of the MPC members suggesting that the next rate move for the Bank of England is more likely to be a rate rise and sooner rather than later, based upon current inflation and growth prospects. That a great deal of volatility in this market, also because Brexit passed its second reading in the House of Commons yesterday. I think it's got to get through today and without any amendments, and then it will move forward next week into the House of Lords to pass through that part of Parliament. But all that is positive for the pound, if only on the basis that it removes uncertainty. It doesn't make the result of Brexit any more positive, or for that matter any more negative. It just means that there is potential for a specific timescale for that to move forward. Okay, guys, so that's it for the update this morning. Predominantly dollar strength we're looking at there. Just to mention once again, the next free trading event, Thursday next week, 16th of February, in the afternoon, following the Phoenix Blue boot camp, the Protege boot camp, which happens in the morning, in central London-based hotel. If you're interested, you want to trade alongside live our Phoenix Blue traders on the afternoon, also learn a lot more about our analysis, and specifically COT analysis, technical analysis, and fundamental analysis, and how we combine the three along with seasonal analysis, please just drop us an email, info@Phoenix Blue, title that free trading, or go through the contacts page on the website. Okay, guys, that's it for today. Have a great day's trading. Let's hope the dollar plays out to the long side, and we can be talking about some banked pips in the morning. Thank you very much for listening, and we'll speak to you again tomorrow. Take care. Bye-bye.